Hi everyone, welcome back to Corporate Decoder, the place where we unpack the juicy details buried in corporate filings. And let me tell you, this company's latest report is a real page turner with some eyebrow raising numbers. So we're diving into BIOMERICA's annual report for the fiscal year ending May 31, 2025. And buckle up because it's a story of strategic cost cutting, a slow but steady climb, and a strong emphasis on future growth. BIOMERICA is a global biomedical technology company. They develop, patents, manufacture, and market diagnostic and therapeutic products. Think tests for diseases, food intolerances, much like what you'd find in a doctor's office or even at home. Let's talk members, because that's where the real story unfolds. The company's selling general and administrative expenses dropped by a significant 16% from 2024 to 2025. That's a saving of nearly $87,500. This big cut came from a reduction in payroll after a workforce downsizing, a decrease in stock compensation, and lower marketing expenses. They are clearly tightening their belt, which is a clear sign of a company trying to manage its cash carefully. On the research and development front, they spent about $1 million in 2025, down from roughly $1.5 million in 2024. This 31% cut mainly came from reducing payroll in that department too, and some savings on their in-foods and high-pass detect projects. It looks like they're in a phase where they're shifting gears from heavy development to making the most of what they've already created. Now, something to note, their dividend and interest income also took a hit, going from about $431,000 in 2024 down to $16,500 in 2025. This drop is mostly because of lower interest rates on their cash, and they have less cash on hand now, which makes sense given they've been cutting costs. All these efforts to cut costs helped them reduce their net loss. For 2025, the net loss was almost $5 million, a good improvement from nearly $6 million in 2024. While still a loss, it's a step in the right direction, showing that some of their cost-saving strategies are working. Let's look at their cash situation. As of May 2025, they had about $2.4 million in cash, and cash equivalents down from over $4 million the previous year. This decrease in cash, combined with their ongoing losses, is what raises concerns about their ability to continue as a going concern. A big phrase you'll see in these reports. It means they might have trouble staying in business if they don't get more money soon. To keep things afloat, they've been actively raising money. In 2025, they brought in over $2 million from selling their own stock through something called an at-the-market or ATM offering. This basically means they're selling shares directly into the stock market to get cash for their operations. Now, let's talk about their actual sales. Net sales were just over $5.3 million in 2025, compared to almost $5.4 million in 2024. It's a tiny drop of about 2%. The company says this was mainly because of lower sales in the retail market, fewer international sales due to potential tariffs, and some ups and downs in demand from clinical labs. They did, however, see a boost from contract manufacturing and their in-foods product. Their cost of sales, however, went up slightly to about $4.8 million in 2025. This means that for every dollar they made from sales, it cost them more to produce their goods compared to the year before. This increase is linked to higher costs in contract manufacturing and their in-foods product, but they also had a reduction in direct labor costs, which helped a bit. Construct BIOMERICA INC and subsidiaries consolidated balance sheets construct. Looking at the big picture on their balance sheet, total assets dropped significantly from over $9 million in 2025. This is largely due to the cash they've spent and lower inventory levels, likely a result of their cost-cutting efforts. Construct accounts payable and accrued expenses construct FIC. On the liability side, accounts payable and accrued expenses also decreased, going from $2.2 million to $1.7 million. This shows they are managing their short-term bills more effectively. The company has a serious history of operating losses, accumulating to a deficit of over $53 million. This is a huge hurdle they need to overcome. While their net loss has narrowed, it still means they are spending more than they earn. Construct BIOMERICA INC and subsidiaries consolidated statements of Accession and comprehensiveless construct. Their consolidated statements of operations clearly show this trend of reduced losses from operations, which came down from nearly $6.4 million in 2024 to about $5.1 million in 2025. This is a positive step, but remember, the sales haven't grown substantially, the reduction in losses mostly from expense cuts. So what's the story here? BIOMERICA is in survival mode. They are aggressively cutting costs to extend their cash runway and are trying to bring in money by selling more stock. Their sales are mostly flat, but their net loss is shrinking primarily due to these cost-saving measures. A key risk they highlight is their reliance on a few big distributors, which could really hurt them if even one of those relationships falters. They also point out risks related to cybersecurity. If their IT systems fail or get breached, it could seriously disrupt their business and cost them a lot of money. This is a modern risk for almost every company, especially one dealing with sensitive health data. Another major concern is government regulation. They operate in a highly regulated field, and any failure to comply or get approvals could be a disaster. They specifically mention new EU regulations called IVDR that have stricter requirements and could make it harder to sell their products in Europe if they don't adapt quickly. Construct BIOMERICA INC and subsidiaries Consolidated State Flows, Construct, and the cash flows tell a story of a company burning through cash to stay afloat. While the cash used in operating activities decreased from over $53 million in 2024 to still a significant outflow. The reduction is due to that net loss and some positive changes in inventory and liabilities, but it's not enough to make them cash flow positive yet. Construct 2020 net cash used investing activities also went down from $11,500 to just $37,000 in 2025. Basically, they're spending much less on new equipment or patents, which is consistent with their cost-cutting strategy. Construct BIOMERICA INC. And subsidiaries nods to consolidated financial statements Construct Sing. Now for my take, BIOMERICA is definitely in a challenging position. They've managed to trim down their expenses, which is good, but their revenue isn't really growing. The fact that they've narrowed their loss is positive, but it's mainly driven by cuts, not sales growth, a strategy that can only take you so far. Their reliance in stock sales to fund operations is a double-edged sword. It keeps them afloat, but it dilutes existing shareholders and signals a lack of organic cash generation. The going concern warning from their auditors is a serious red flag demanding attention. Honestly, their biggest strength right now is their persistence and their focus on cost control. Their weakness is their very tight cash situation and the lack of substantial revenue growth. The key opportunity is the successful commercialization of their InFoods and Hop Plus Detect products, but that success is far from guaranteed. The significant risk remains their ability to secure enough funding to survive and grow while navigating complex regulations and intense competition. Will they turn the corner? It remains to be seen, but they are clearly fighting to stay in the game. Alright, that's our deep dive into BIOMERICA's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord community, linked in the description below. Thanks for watching. See you next time.